Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. Thank you for joining us this week. We've got a lot on our plate. So much has been happening. Obviously, there's been some cybersecurity issues today on Friday as we record the show. So what better reason than discuss gold and cybersecurity? Is it time to de-digitize your wealth? As well, speaking of digital wealth, we'll look into Bitcoin energy mining. Is it worth the cost? Stick around to hear about that. As well, Trump gave his speech at the RNC just last night as we record the show on Friday, and he talked about some of his policies moving forward, what he would be looking to do, and at this point he is the front runner to become the next president of the United States. If some people don't think the current one is legitimate. Nonetheless, we want to look at some of those policies and ask, is it good for gold? What could happen if you're looking at getting rid of inflation? That's a good thing, but is that bad for gold? We'll talk about that as well. But first, Jerry, the deficit in the United States hit $35 trillion this week.
That's it?
And growing $100 trillion every few months.
It's very sad.
Or $1 trillion every few months. Every 100 days. Gold also hit another all-time high. We almost got to $2,500. It was moving very quickly this week. But of course, as we move into today, we started to see a pullback, slap down in the market. Gold currently trading actually back down below $2,400. Silver giving back gains, getting just currently trading a little bit below $30. Let's start there. What do you make of these pullbacks in the market? Should we be concerned, or do we take advantage of the dip?
No, you definitely take advantage of the dip. Obviously, gold hitting, yes, as you mentioned, all-time high, 24.8360 on Wednesday, all on the back of the fuel, which was the made-up inflation number showing a drop in inflation. But as we're reminded by Kobasi letter that car insurance inflation is up 20%, transportation inflation is up 9.5%, 6.9% up for hospital services. Everything is up, up, up. Yet the traders just this week, on the back of poor job data and on the back of cutting inflation, they're doing such a great job at the Fed that even Jerome Powell wants to end the Federal Reserve. But just this week on CNBC, traders see the odds now of a Fed rate cut by September at 100%. Just 2 weeks ago, Jeremy, we were down at 80 to 80%. A week ago, 2 weeks before that, it was 70%. When confidence in the Federal Reserve wanes, sentiment is shifting rapidly, especially today. How can anyone plan for the future when the odds are changing so quickly? Secure your future today with gold and silver. Silver is that solid foundation. We're seeing a little bit of pullback today on the profit taking, obviously from the cybersecurity pull down out of tech. But a good reminder from Jamie Carrasco from Canaccord Genuity in Toronto. He posted on X a chart and in a calendar of the monthly options expiry today for gold. Is this adversity or opportunity? I commented that gold and the silver the rally are poised to continue to rally with rate cut momentum ready to boost. With 100% odds of a rate cut coming by September, it could be sooner with everything that's going on in the world today, Jeremy.
Well, I think that let's just talk about price for just a moment. You know, some people can become very, very concerned about price, especially when they're getting into the market for the first time. And then you have a lot of other people who don't care what the price is. You know, I've got clients who've purchased into the market. They really don't care what the price is. It's more about the peace of mind of having the physical gold or silver.
That's right.
And it's about the wealth protection that it's giving them. They know that over time, their purchasing power is going to grow by having this asset versus the money that can be created and all of the other issues around that. But of course, you can't help but take a speculative approach sometimes to the markets.
True.
You just can't help it. You know, we've had a few people recently call up and say, I'm going to sell. So, okay, tell me about that, right? Why? And
Not that we want to stop you from selling. We just want to know.
no, okay. I'm glad you brought that up. Look, when it comes to that sort of thing, just to give a sense of what we do here at Guildhall, we like to have a conversation, but we're not here to twist anybody's arm. We want to say, hey, have you looked at both sides of the coin? You're an adult. Now that we've provided you some information, you make the final decision. So those type of conversations are usually had only once, because we're not here to keep pushing and pushing and pushing.
Right.
But it usually, a lot of times, people might call to say, I want to sell, and you understand that that's actually just a conversation starter. It's just a way to start a conversation, right? And so you have that conversation. And why? Some people, well, I got into it, it's gone up, it's done what I was looking for it to do, and that's enough. Okay. Selling for selling's sake is great. Where could it go from here? Why are we holding it in the first place? Are the fundamentals in play as much today as they were 3, 4, 5, 6 years ago? What's in that respect? What's changed? Or it could be just, hey, I've got the percentage of the gold in my portfolio has increased. I want to bring it back down to 20% or bring it back down to 15%. That's absolutely legitimate as well. Now, obviously, these are sort of outlier examples, but
right.
I think it's a good opportunity to just discuss the fact that where is this market headed, and the idea of speculation. It's not necessarily about price, but what it's going to buy you in the future, right? A $20 bill is still a $20 bill, but it buys you a lot less today than it did 3 years ago. So it's not about price. Price is not a determinant factor anymore. People talk about gold going to $27,000. Okay, I don't know what anything is going to be worth at that point, like what things will cost rather. But I know that gold will buy you more stuff.
Yeah.
Right?
Yeah.
Right now, the gold, you need probably 17 or 18 ounces of gold to buy the Dow. And in 2011, you needed 4.
Right.
And in 1980, you needed just 1. That's
There you
it,
go.
just 1. So imagine where the price of gold could go in that respect. It could go to $27,000.
Yeah.
And it's not about the price. It's about what it can buy you.
Right.
So, when the price is down, it's great to say buy more, take advantage of the price. But in the longer term, this is really about protecting your wealth. Is it going to give you more purchasing power down the road?
Yes, this is a huge conversation for many of our clients. It's something that we have all the time for my clients personally. And we want you to give us a call, 1-877-8-SILVER, and to discuss, if this is right for you. Where else are you going to put your money these days? Precious metals is insurance against inflation. The paper money is simply just losing its purchasing power. Just this week, Jeremy, I had to hear from a client of mine who passed away last year, right? And I met him on about 6 or 7 times prior to his passing in 2021, 2022, where he was accumulating northwards of up to $300,000 worth of precious metals, more so in silver. His portfolio was up handsomely. He was up over $100,000 in cash. He passed away, and his requests were, I hope my kids keep the product. I hope they know why Dad is buying this product. I had the conversation, unfortunately, with the kids, and they decided to sell everything off. So just going back to the seller, I just wanted to find out if they had this conversation, if they understood why Dad bought all this product. And they said yes, but we are the estate. We wanna divest and sell it. So put through the order. This is what we do here at Guildhall. We want to know where your heart's at, where your mind's at, and what is the best place for your money. Where do you want your wealth, your reserve, your nest egg? Because I got to tell you, if we look at the numbers, Jeremy, which we'll probably hopefully have time to get into, this is one of the most complacent times that traders and investments are in over decades. They're sitting in stocks and bonds, and they think that there's a future in paper instruments. And really and truly, the way that things are going today, you're not going to have much purchasing power with the paper. That's for sure.
And there's security issues, cybersecurity issues. There could be blackouts. There's lots of countries out there that are used to rolling blackouts. We don't expect it here in North America. We don't expect it when we're trying to deal in stock markets and banking and making the world go round financially. And then all of a sudden you have something like what happened today or what happened, I guess, last summer with Rogers. Was it last summer? Maybe the summer before.
Felt like yesterday.
It's all just becoming a blur.
It's true.
But gold marches on, right? Where was the price of gold a year ago? It was under $2,000 an ounce. In fact, if we look at where gold was at the beginning of the 20th century, it was $20 an ounce. And then it went up to basically $275 as it ended that century. That's a 1,275% gain. Now, here's an even better, interesting fact. Yes, at the turn of the 20th century, in the 1900s, the price of gold was $20 an ounce. But in 1800, it was $20 an ounce.
Oh.
So when you have a gold standard, you don't need the price of gold to fluctuate because the dollar is stable. And it's very interesting in that respect. But when you are not tied to a gold standard, then there is a de facto gold standard. And as the dollar devalues, the price of gold continues higher and higher and higher. And that's what we're seeing right now. Gold is up 800% in the run from 2000 to where we are today. And it doesn't look like there's any signs of stopping. Of course, we'll look at what Trump's policies are. Maybe that could stop the run. What do you think?
Yeah, definitely could. You know, with the devaluation of currencies, it's not just the currencies that are being devalued. Everything else goes with it. Lifestyles, standards of living, prices continue to rise. People are underwater. Bankruptcies prevail, and this is what we're seeing. So we need a change, and the best change is with yourself. Become your own central bank, undigitize your wealth with precious metals, and start today. There is no better time to start than today. Give us a call, 1-8778-SILVER, and the website, guildhallwealth.com.
Remember, everything at Guildhall is physical precious metals. You can buy it direct, take it home. You can buy it on a phone call. You can go through our e-store, guildhallpreciousmetals.com. Pick up an ounce of gold, tube of silver maples, maybe start off with a 10-ounce bar. Jerry, I was talking to someone today. We're switching we're looking to switch our CRM systems. We use Salesforce. We want to switch to something else. It's not really working for us. And I called someone from 2013.
All right.
And I just said, what's been holding you back? and he just said,
11 years.
Yeah, he just said, I don't know. I said, all you ever had to do was buy a 10-ounce bar here and there. You would have had 400 or 500 ounces at this point, and it would have been up tremendously. No answers, no significant response to that. I just thought it was funny, and I thought the idea of, all it really takes is buying a 10-ounce bar of silver, which may cost you $400. Okay,
Good.
That's not going to necessarily break the bank for most people.
Make or break anyone.
But you could do that here and there twice a year. You're not going to miss the $1,000. But over the next several years, you're going to end up with something that's only going to continue to grow in value. That's why something like that makes such a great gift. I digress. Give us a call. Go to the website. Discover it for yourself. You'll see what we mean over the next few years. Jerry, let's talk about cybersecurity and what that means for precious metals.
It's a huge topic, one that has been covered over the course of the decade, I think, from Jim Rickards to even Jerome Powell, that cybersecurity, cyber threats, anything digital comes with many risks. And coming from the mouth of the man himself, the Federal Reserve chairman, who called for the end of the Federal Reserve, just fire me. He said months ago, I think this is also in front of the Senate Banking Committee, where he goes off script a couple times. You better stick to the script, Jerome, because you're revealing a lot of truths here. He goes, this is Fed Powell on IT failure and cyber attacks. Cyber is the greatest risk. We know about credit crisis and things like that, but we never had something on a major financial institution, bank, or financial market utility with being stocks and derivatives. And today marks the first time in history. On July 19, 2024, a massive global technology outage occurred. It caused widespread disruptions across various industries globally, including air, travel, banking, and media. This is being described as potentially the largest outage in history. And some of the major points here, the cause, The root cause of the outage was traced to a software update from CrowdStrike. Now, CrowdStrike is the cyber firm that has been outsourced to Microsoft. They're involved in a lot of, they're connected to Clinton's, and there's a lot of connections. They are owned by who owns CrowdStrike Holdings. Your major players, you got BlackRock, you got Vanguard, you got Morgan Stanley, Jennison Associates, all in the mix owning. Even Nancy Pelosi has some CrowdStrike shares in the portfolio. But major issues and impacts with travel and banking, banks and financial services companies in multiple countries, including Australia, India, Germany, reported disruptions to banking services. The outage has also affected healthcare systems, Jeremy, with booking systems used by doctors in England going online. And Microsoft is involved as this update it impacted systems running Microsoft Windows operating systems. And the key takeaway here, how widespread this is half of the Fortune 500 companies are using this platform, are using these Microsoft products, but it's affecting technology. It's affecting digital money. And our thoughts regarding this echo silver academies. The power grids, as we can see, are stressed to the maximum. Cyber attacks are a risk, as Jerome Powell pointed out. The money in our banking system is not physical. It's digital. Digital ones and zeros, binary codes that can be frozen, that can be hacked, that can be disappeared if they need to.
And as well, when you think about that this was a quote-unquote software update, just like the Rogers one was. And you say, really? Is incompetence going to be our go-to excuse for why these things are happening constantly? Is it always going to be incompetence? If we wake up and the cash is gone from our bank, or we can't access cash to make payments for this and that, are we going to blame just incompetence of technology? Is that where we're headed with this?
You can't go there, right? This is the system that has been built, and it's vital to realize that in the absence of power for us, your gold and silver still will be there. It'll shimmer and shine under the candlelight, but this is a stark contrast to things like cyber, like cryptocurrencies, for example, that relies on power. When no power means no money, unfortunately, and this is the ultimate risk. And for us, Guildhall, we offer the most efficient and direct routes into the physical precious metals space so that you can protect your wealth, whether it be, you call it the nest egg, or your reserves, or your money. This money must be held entirely outside of a failing currency system and a failing digital banking system. By owning tangible hard assets, you are now decoupling, separating your important wealth away from all of these risks. Now, we know who the players are. They're not your friends. Stop acting like they're going to be friendly towards you, because push comes to shove. When things happen, your money is going to fall back on your decisions that you made for yourselves.
Talk to us about having the physical within a registered account. Is there a risk there? We work with Questrade. They're digital. What are some of the risks that could happen there? If something were to happen cyber-wise and their system goes down, am I going to lose my gold?
No, not at all. Like, this was a question I think someone commented on our YouTube channel, Guildhall WM. I checked that out. Just check the old comment section, and one person had a good question. What happens when the currency fails? What happens to my gold and silver? Well, what you're doing by owning gold and silver although in a registered account, the assets themselves are held entirely outside of the digital financial system, fully insured, fully liquid, and accessible. And if anything were to happen, blackouts, currency issues, when the lights go on, the metals are still there. When the lights go on and you're just in a bank account, you better hope and pray that the numbers are still there when you wake up. Because I could remember people in Venezuela, when they woke up one day, 20% of their wealth was gone, because the numbers, the money and the wealth that are in the banking system is just digital, right? So by having your money outside and in the registered plans, in the case of Guildhall, precious metals, RSPs, and TFSAs and pension liras, this is a firewall. As we are following the trajectory and the pace at which things are trending, things are getting very exciting, very worrisome, but you have an exit strategy. We have an exit for you in the event of any issues.
Yeah, and I think this speaks to the concept of just simply hard money in the first place. Central banks aren't loading up on paper money, and they're not loading up on cryptocurrencies. They're loading up on actual physical precious metals. On Gold Telegraph this past week, there was a post. Robert Kennedy Jr. has been advocating to cut the military spending in half. He wants to back the Treasury with hard assets. 2 members of his family were killed, and today he finally got protection. The establishment must be rattled. Oh, look at that word. You were talking about that a couple weeks ago. The foundations were rattling with everything that is going on. And I think this idea of the physical asset, and I think to anyone who's worried about, well, what happens if this goes down? What good will gold do me? The question is wouldn't you be happy to have an asset at that point?
Exactly.
Because if you had everything in a digital form and it disappeared overnight, wouldn't you be glad you had an actual asset?
Mark Twain said, I'm more concerned about the return of my money than the return on my money. At the end of the day, you want to make sure it's there. Your nest egg has to be there.
Yeah, and I think that ultimately people can very quickly come to understand the value of those actual real things and what they're worth. And again, if you either own them or you don't at that point. And I'm not saying that we're going to be spending our bills with it, but there are definitely ways that you can have a gold-backed currency where you have a currency that's easy to spend, but it's backed by something. And that's what the BRICS are doing, right? With the unit, 40% backing of a currency with gold, which means that if you want to deal with us, you're either buying that currency with gold or you're giving us gold to trade with us. And I think that it's a fantastic idea to create equality, because as we've come to learn through the Federal Reserve and everything else like that, with our current financial system, is it's too easy for them to print money. It's too easy for them to deficit spend. It comes back to that classic, why am I paying taxes if they can print all this money? We know that tax is just theft. It's just punitive at this point. So go ahead.
On the back of the unit, regarding this cyber issue and the largest IT blackout in history, Vince Lancy made a good point that any system that was set up outside of the digital SWIFT system, which is the Western banking system, was safe, was still up and running. And this is the M-Payments platform. The BRICS nations have set up a unit of exchange backed by 40% gold. This is the reason why. They're loading up on gold because the uncertainty and volatility around the world and the trend of de-dollarizing just to preserve the purchasing power of their country's reserves. These countries are doing what they need to do to preserve the people's reserves, the people's livelihoods. So the time right now to convert out of paper fiat currencies that are backed by nothing but promises and maybe your mighty military and dollar-denominated assets, convert them into physical monetary metals. The time to do so is now. Do as the central banks do. We want to help you to do that. Become your own central bank with Guildhall. Remember, Canada has no reserves. We are wealthy with gold. We are number 4 in exports in terms of gold, and we can do this ourselves. The Canadians should get involved. Give us a call, 1-877-8-SILVER, the website, guildhallwealth.com.
And look, what's wrong with making money? What's wrong with becoming wealthier? And we have a pretty tried and true asset here that's been determined through bull markets over and over again that they continue to be part of a massive wealth transfer and can be handed down generation to generation, and the wealth just keeps growing over time. You don't have to be a genius trader in order to grow your wealth by holding an asset. Gary Wagner, he's an expert trader. He says that gold could hit $2,700 by year's end. Imagine that. We go from $2,000 to $2,700. That could push silver easily into the $34, $35 range, which is like $5, $6, $7 higher from where we are today. Great way to get into the market, be ahead, and be ready for the next big moves. Coming up, we want to talk about Putin, crypto mining, is it worth the cost? And we should also get into Trump's policies. Are they going to be good or bad for gold? The number, 1-877-8-SILVER. The website, guildhallwealth.com. Jerry, let's talk about some of Trump's potential policies that he's looking at and whether or not they could be good or bad for gold. So some of the policies he was discussing in his speech on Thursday night was getting inflation down. I don't think anyone would disagree with trying to get inflation down. He seems very confident that can happen. Bringing manufacturing back using tariffs, that could be bad for some companies in America who maybe work with foreign countries. But bringing manufacturing back, getting prosperity, giving people jobs, these sorts of things. Energy was a big thing. We'll kind of put a pin in that because I think that plays well into the crypto mining aspect, because right now it could be a major problem. We'll discuss that in a little bit. But let's talk about low interest rates as well. He wants to get interest rates down, but as well as inflation. Okay, that seems to fly in the face of the Federal Reserve's strategies, that they're stuck between a rock and a hard place, where their concept of getting inflation down is by raising interest rates. Mm-hmm. And they need to stop spending money. And they're not necessarily the complete spenders. There's two purses there. There's the Federal Reserve, but there's also the government.
Yeah.
So how do you see that playing out? I have some ideas, but I want to get your thoughts on it.
Well,
can you do both?
You can, but to the detriment of the people and the prices that we're going to witness. If you're going to cut rates, remembering the reason why we're raising rates in the first place was because of the amount of printing that happened in the last 5 years for COVID. For Canada, for example, 4 times the size of our economy was printed. The loonies were printed. Inflation just got let out of the bag. So to combat the 40-year high inflation, the U.S. Federal Reserve began to hike interest rates, destroying livelihoods. Bankruptcies started to surge. We're seeing the regional banks starting to go under. Unrealized losses are prevailing. It's damaging. And to save face, they're going to have to cut interest rates. They're now priced in at 100% rate cut by September. Citigroup said they're going to slash rates by 200 points over 8 straight meetings as the economy heads for a sharper downtrend. But the problem is, if you cut, inflation is not like a thermostat that, it's too hot in here. Just turn it down a little bit. Can you turn it down a tad? It's a little hot. You can't just turn it down. It's going to continue to go up and up. Like Kobeissi letter shows, inflation is up on average over 11% on average. But we are the fools to believe the government saying that inflation's under control. It's below 3%.
Okay, so let's bring energy in as a factor. I said we talk about it later. Let's talk about it now. Certainly we know that it helped end the inflation of the 80s, which is if you can drill, get oil prices down, get energy prices down, then that is going to put a lot of money back in the pockets of manufacturing, of you getting to work every day, and putting all that money back in your pocket is going to lower inflation and increase productivity. So maybe could it just be the energy side of it that creates the lower inflation and higher productivity?
I think it can as well. Yep, that's a good policy to lower inflation. If you start freeing up your own nation's reserves, then yeah, definitely you can bring inflation down that way.
So let's talk about physical gold. In the last Trump presidency, it's not as though gold was performing poorly during the presidency. I'm going to pull up the charts right here. If we look at the time period, just give you a moment here. So 2016. Price of gold was up 9%. 2017, it was up 13%. 2018, it was down 2%. And 2019, it was up 18%. And then 2020, it was up 24%. In Canadian dollars, it was up every single year. Mm-hmm. So we can't necessarily say that a Trump presidency is bad for gold. But I'm gonna drop down my wild card right now. How do you lower interest rates and lower inflation at the same time?
The answer?
You back with gold, baby.
That's the only way.
So we know that there's been conflict between him and the Federal Reserve. We know that his new vice president, his running mate,
pick.
JD Vance, venture capitalist, buddies with Palantir, Peter Thiel, best known as the guy who front ran the Silicon Valley bank collapse. They had a lot of connections with Epstein. He is also, runs Palantir. They were gold buyers. These guys understand gold.
Yeah, black swans. They understand black swans.
JD Vance has gold and Bitcoin, by the way, but he has gold in his portfolio. And ultimately, again, he wants to deregulate the Fed. There's lots of things going on here, but I do think that if you take RFK wanting to back the Treasury with gold, we see central banks buying gold. We know Trump likes gold. He accepted gold as rent, right? As lease payments, accepting kilobars, not to be confused with the senator
Bob Menendez,
who was taking kilo golds
as a bribe.
As a bribe. This was not the case.
Big difference.
Big difference. So I just think that if you're that's one of the ways you would do it. And again, he pushed forth Judy Shelton as a nominee for the Fed. And they hated that, the Federal Reserve, because they knew she was going to disrupt them, that she was going to sit there over them and say, are you guys going with the incompetence route again? Mm-hmm. Are we going with that as the reason why these things are happening? Incompetence?
Yep.
Right? As Greg Hunter from USA Watchdog, too stupid to be stupid. And she's pushing forth the idea that Greenspan put forth, let's have a gold-backed bond. Mm-hmm. Let's have a gold-backed bond and see how people do. They always can convert out of the bond to gold, and that's only going to make the discipline for gold standard and the dollar being strong. You can have the best of both worlds.
Yeah.
And that would push gold mighty higher.
Yeah.
Mightily higher, I should say.
Exactly. I couldn't agree more. And the timing of it all is very, very suspect, but also very coincidental. It's shedding a lot of light from Judy Shelton and the likes of highlighting backing up with gold. And this week, Trump was saying that, to the Federal Reserve, don't cut rates this year. He knows, because if you cut rates, inflation goes. You have to do something before you start cutting rates, protect the currency, back it up. And just going back to JD Vance and what that means, his pick, what that means for gold. I think, is it good or bad? I think good means it's being used, and bad means gold will not be used. And I think in this case, because gold will be used, it's going to be the instrument by which everything will be focused around. We don't know exactly how much. We know the BRICS are doing 40% with their unit. But JD Vance, ultimately, he said to Chairman Powell a while ago before the Senate Banking Committee, he said this is what his views were regarding a gold standard. The VP pick, JD Vance, has shown interest in returning to the gold standard as a way to impose discipline on the Federal Reserve, lowering inflation and stabilizing the economy by tying the value of currency to a tangible asset, very, very much mimicking the policies of Trump's team, who back in April, his team wants to restructure the Fed and wants to do it secretly. Very secretly, actually, because you can't do it overtly, apparently. Andrew Jackson learned and JFK learned. And to quote Andrew Jackson, the bank, Mr. Van Buren, is trying to kill me, but I will kill it, is what Andrew Jackson said. And we'll see where this action plays out. The crosshairs were there, but it missed. But we're moving towards restructuring the Federal Reserve, whether you like it or not.
Wow, Jerry Correia dropping bombs on the Real Money Show, talking about J.D. Vance saying he wants to go back to a gold standard? Is that who the VP pick is?
He's vocal on the highlighting, obviously, borders, which is inflationary. He ties the borders to inflation. He's highlighting the U.S. dollar. The relevance of it could have some downside to having a global reserve currency. There are ways around it, but he's an advocate for gold. And how this means for gold, since it's going to be supported, it's going to be a good in terms of price. If you care about price.
Well, I mean, apparently he only has $250,000 worth of gold in his portfolio, but hey, you never know. Maybe that's just on the books. Let's talk about crypto mining. You, just before the show, you were telling me about what it costs to actually mine a Bitcoin? I know that this has been a discussion here and there, the cost of energy and Bitcoin. Is it worth it? Tell us about what it actually costs to mine Bitcoin right now.
Yeah, just coming off of the topic of the Vice President pick JD Vance, who's actually a supporter of the crypto space and revamping that space too. So it's going to be, bringing some health, hopefully, to that industry as well. So focusing now on Bitcoin, there is a cost to produce the Bitcoin. This is coming from SOS Rocco report. He called it the gluttonous amount of energy to mine Bitcoin. To mine one Bitcoin, that same energy could provide, get this, 29 homes powered for an entire year, or 165 ounces of newly mined gold. And it does take a lot of work and energy.
How many ounces?
165 ounces.
So does that mean that it's a 165 to 1 ratio is what it should be? Like if it costs Bitcoin 165 ounces of gold, does that mean that the price of Bitcoin right now is extremely undervalued?
That's a good way of looking at it. That's right.
Well, I'm trying.
Mining, yeah, that does make sense. We can establish that ratio today.
Well, I guess but the question is it worth the cost of mining?
No.
Right? To me, that seems like anything else from the Green Deal sort of thing, just subsidizing it.
Right.
So you subsidize it, it's costing you hundreds and hundreds of thousands of dollars to mine this cryptocurrency, and is it worth that? Is it really worth that?
No, and for silver, 25,000 ounces of newly mined silver per year.
That's a house.
So how much energy would supply various units based on one Bitcoin? At 500,000 kilowatts, one Bitcoin equals 29 homes, up to 25,000 ounces of silver. That is crazy. And if you think about why we're mining gold, why we are mining silver, there are usages, technological usages going into, whether it be into the military, whether it be into technology or silverware or even solar photovoltaics, aerospace for gold, DNA technology that has now been revealed for gold. We're mining one Bitcoin for the purpose of what? The ETF?
No,
because
if it goes to $300,000, if it goes to $300,000, I'll be rich. That's why.
For profit and greed. So it's a big difference, and I think it's not worth the squeeze for the mine for sure, unless there's free energy somewhere.
Well, free energy is a big part of it. Before we get to that, Putin, this came out of Politico. Putin fears crypto mining could cause energy shortages in Russia. So I just wanted to bring that up because it kind of maps on to what you're talking about here from SRS Rocco report, that the question of the energy right now is, okay, well, what if you got let's bring what we were talking about with Trump. What if you got energy prices down? Could that fix the situation? I mean, I suppose if you're getting the energy prices down, I'm going to answer my own question.
Yeah.
Then it's still the same ratio of what it costs to mine the gold versus the cryptocurrency, right?
Right, exactly.
So it's not gonna actually make it economical all of a sudden to mine this for what its purposes are.
Right.
So you really have to think about, is this going to be worth the cost down the road? Why? I know. SRS Rocco talks about this. Why is the cost of energy so important? But then if energy can be made so much cheaper, it does kind of ruin his theories of, like peak oil and cost of energy. Like what if they got the cost of energy that much lower? What does that mean for the Bitcoin? What does it mean for gold? What would that mean overall for the economy and the use of, like, would the price of gold continue higher if energy prices were significantly lower? Or what if there was free energy?
Yeah, this is something they have to consider. Energy is that important in all of these industries. But gold and silver are, as much as we rely on energy for the purpose of mining it, we don't. It's already been made. It's created already. It's already been existing. This is something that the earth made. It's God made, and it doesn't have to be created out of thin air. Whereas algorithms that are gyrating and creating these algorithms for the purpose of creating a Bitcoin, it's much different. The output, yes, we need the ounce of gold and silver and maybe the one Bitcoin, but with freer energy and you're lowering your costs, it certainly can have an impact on price.
I think that ultimately the world runs on real things. If you want AI, you want cryptocurrencies, you're going to need processing power, you're going to need computers. Yes, it'd be great if energy was cheap, but you're going to still need the stuff that's in those servers, the stuff that's in the compartments holding the servers. You're going to need it in the lines that's moving the energy all around, and all of these things. That there's a real world that always backs up the invisible world or digital world. I grew up playing Atari. It's a magic on the screen, but there's a physical hardware box filled with elements, filled with stuff. You want a green car? It's filled with rare earth minerals and silver and all of these things. So you need real world stuff.
Right.
And if energy's free, then that means you're just going to need more real world stuff because you're just going to be building more things. Mm-hmm. So I don't see it as a bad thing for the precious metals.
No, very good argument.
30 seconds, final thoughts here,
No,
Jerry.
very good argument. This is very testament to what we've been talking about between the difference between real and cyber. You need the real stuff to keep real economies going, real wealth safeguarded, and there's only one solution, is to get real, and we want to help you to do that. We want you to get in touch with us, find out where you should be putting your money. Is it stocks that are totally overvalued, bonds being beat up by gold now for the first time in 53 years? Where is it safe to put your money? The safest place is in precious metals right now because the opportunity will abound, and we want to be a part of this journey with you, the ride upwards to real wealth changing, life-changing experiences we're going to experience together. And we want you to give us a call to do that, 1-877-8-SILVER, the website, guildhallwealth.com.
It's all about real wealth, real physical gold, real physical silver. Take it home, store it in the vault, put it into your RSP, TFSA, Lira, LIF, RIF. It's all about the real. Real is rare. It's the Real Money Show. Thanks for joining us this week. Can't wait to speak to you next week here on the Real Money Show on 640 Toronto.